Hi, I'm Eddie Del Rio with Dinero 911, and in our first vlog today, we're gonna go ahead and talk about buying your first semi truck. Buying that first semi truck, big deal, man. I know it's a big deal. You're coming from being an owner or owner operator, working for a company, being a company person, or you basically haven't been on your own, so now you're that owner operator going on your own. Very excited to go ahead and do it. I know it's scary as hell, but there's great opportunity for it. You know it because I'm sure you studied it. But today we're going to talk about financing that first truck so you can get rocking and rolling right away in your business. Now, there's certain things you got to consider when you're going to be that owner operator and financing that business, and that's what I'm here to help you out with today. Uh, First of all, no matter what, anything you do, any type of business, you got to have your projections, but especially that budget. What's going to be your budget to go ahead and run that business? So, what's my revenue, my sales, projected out throughout the year? You say, hey, I know that these months are going to work. I got to take a little break. I'm going to have my biggest peak at this particular time, whatever the case may be. But you need to go ahead and study that so you know what your revenue is. And of course, you also have your expenses. And I would always put an amount there for reserve. And if you're looking to finance that truck, put your truck payment there as well. And there you should have your bottom line numbers and knowing exactly if you can do this or not. It's not if. I know that you can do it. But you got to know your numbers before you do it. And if you're not just ready yet, you know what, man? That is perfectly fine. Perfectly fine. You're just going to go ahead and set yourself up right the first time because that's how you're going to go ahead and set up yourself for success. So what do you got to consider when financing a truck? We already talked about the budget. You got to consider also the type of truck you're looking to buy. That semi truck, what is it you're going to be hauling? What type of cargo? How many miles do you expect to put on it? So narrow it down to a brand, International, Volvo, Mack, Peterbilt, Kenworth, whatever it might be. Then once you know the brand, narrow down the model, then know your pricing and have a good general idea of what that truck and year cost. So that way when you go to the dealership to go buy, you're an educated consumer to go ahead and buy that truck. So do that. Once you have that, you're going to think I'm crazy to say this. Right away, one of the first things, even before down payment, know your insurance cost. What's going to be the insurance to go ahead and run this business? To insure this truck, what's it going to cost? Not only from a liability standpoint, but also if you're financing it, your lender or your leasing company is going to require you to insure that truck. They want to know that their investment is protected. So you got to know what that insurance cost is and know what are the down payment requirements there. Next, what's the down payment money you have available? I don't want you to break the bank and dump it all in there. If you don't have it yet, that's great. That's fine. Because you got to have a reserve in case whenever it is that something happens to the truck, maintenance, breakdown, whatever it might be, you want to be ready because you got to be putting money away to that reserve. So you got to know that you're going to start off strong with some level of working capital. Usually in the down payment, depending on what program you do and the type of truck that it is, the value of the truck, your credit score, all that's going to come into play. You're going to be somewhere between 20 and 30%, somewhere around there that you're going to require. That's down payment, 20 to 30%, separate from insurance, okay? 20 to 30%. Now, after that, once you got the down payment down packed, you got to know what your registration cost. Well, depending on what your scenario is going to be, if you're going to be riding under somebody and you're going to get a lot of that taken care of under where you're going to be leasing on your truck, whatever the case is, know what your tax implication is in buying that truck in the state where you're looking to register the truck. Have that in mind. Do those numbers, jot it down. Now, after you get all that, then you need to know what are the other things you got to keep in mind when you're going to finance that truck. There's many options. There's actually 4 options available to finance that truck. One, are you going to lease it? Are you going to do a leasing arrangement with a leasing company where that's how you finance that purchase as a lease? Two, is it an equipment finance agreement? Three, is it a straight up loan? What type of loan is it? But is it a loan? Do you know what the fourth one is? The fourth one, you guessed it, is you. You buy that truck cash. You buy that truck cash, you don't get involved with 1 through 3. If you got that, fantastic. If not, you have those 3 options. In other vlogs, we'll break down the difference between all the different options. So based on that, then you need to know what your personal credit score is. Usually, I like to see that the business, you set up a business, because you are a business, the business is buying the truck, but you as the owner of the business are guaranteeing that for that business. So your personal credit does come into play. Any of those scenarios, except obviously you, from leasing all the way down to a loan, we'll look at your personal credit. Know your personal credit history, not only your score, the history of it, so that when you go to a lender, you already have an idea where you're going to be at. Not only that, but that type of information also helps the dealer where you're at know exactly the lenders that they work with, how they're going to structure the financing. The higher, the better your credit is, the lower the credit, the lower the interest rate is, or the cost of capital, or the lease rate. The lower your credit score is, the higher the interest cost or the lease rate will be. So out there, the lowest score that you'll see that will usually be accepted, 550 to 500, somewhere around there. If they accept a lot lower, you're dumping almost 50% down or more into the truck if they will consider it. Gotta have that in mind. The great thing is it's all doable. It's all doable to go ahead and do it, but at the end of the day, you need to know your numbers like with anything. You're running a business. You're a business owner. Nothing to be scary about, but get it down packed and you'll be ready to go ahead and finance that truck. And I trust you find this information useful. I'm sure you will. That's why I would like you to like and subscribe to our channel. Put on those notifications. We'll be putting great content all the time. This content will also be available in Spanish for those that speak Spanish, that prefer to hear it in Spanish. Like and subscribe. Get the notifications, because we'll be talking all finance related topics. Everything that you can imagine under the sun. Even for your personal finance as the business owner of a trucking company. And we'll also talk about other things that you need to keep in mind along the way as you're running your business. We're here as an advocate for you. Always ask your questions below on the commentary. Feel free to drop the questions. We'll always be responding and be available for you to answer those questions. Again, Eddie Del Rio with Dinero 911. Thank you.